All right, yo, what's up, you guys? Welcome to this video. Welcome to Axia. We're doing a quick video here, kind of covering the G20 meetings and what happened today. So without further ado, obviously there was a lot of news about cryptocurrency. Let's do a quick little technical analysis on the charts, and then we're going to throw it back to the fundamental news and kind of how it all intertwines and interacts. So let's hop onto the chart that I'm sure everybody's interested in, Ripple. Okay, Ripple is right now going bullish, but let's kind of take a look at what exactly is happening. So personally, my prediction was the 50-cent marker would be hit. We didn't quite get to 50 cents, even though it was a long time coming. We hit 58 cents back here, and then we popped up, came back down, and we hit a low of, I believe it was about 53. There's a little just dry. A little dry at 54. It was 53, 73. You guys, is where we really hit that all-time low. And then what you can really see here from not only the G20 meetings, but a whole load of other confluences that I'm sure quite a bit of people are not familiar with, unless you're really actively keeping track of the markets. We're seeing a whole lot of confluence happening with the fact that second quarter of this year is coming up. So my initial predictions were first quarter we would see some bearish momentum, and it was quite a bearish first quarter. That's definitely for sure. But second quarter into third quarter, we should see for the crypto market space, we should really see a bullish kickoff. Okay, second quarter, which is happening at the beginning of April, end of March, is going to be kind of a less of a volumized quarter, so to speak, than I'm expecting third quarter to be. Second quarter is kind of going to be like the transitional point, right? Where you can obviously see that it's starting to go back up, but it's not going to have the massive momentum that everyone thinks that it will have, right? And these are obviously just my predictions based on, I've been watching cryptos for a little over a year before it got super overhyped and trendy and all this stuff. So I know what's going on for the most part. When it comes to this, the predictions for the most part are pretty accurate, and that's kind of just what I'm sensing based on technicals, based on fundamentals, and a variety of other events. But the G20 meetings really pushed it up. Why? Because when everyone got together in that room, basically what was said was that they are not interested in doing all of these various regulations for cryptos. And the reason they're not interested is because they don't see it as a threat to the economy. Okay, so this is said obviously by all the Congress people at the G20 meeting. Incredibly positive news for the crypto space. So all of the BS that North Korea, South Korea, just left and right, France, Spain, all these places, Singapore, all these different places that were once threatening regulation and all this other crap. It's all going to basically be washed away, right? It's all false rumors. It's all false news. And the main reason that news came out was to have enough power to push all of this down. And it's healthy that it happened. So everyone started freaking out, right? Because, oh my gosh, the crypto market's crashing. Nothing is crashing, you guys. I want you to understand this is not only coming from my perspective, but also from hours and hours and hours of just countless research time done into the overall aspects of really cryptocurrency, what it is, the blockchain, the technology itself. You got to understand technology itself, within itself, is something that grows at an exponential rate, right? It didn't take us 30 years to get to the iPhone 10. It took like 5. So the fact that technology is advancing this quickly in our currency and our monetary aspects of the economy are not advancing with it is something huge, right? And that's why cryptos really came into the space, because it acts as a conduit to really boost that, to boost the way currency is transacted into the next level. That'll essentially do a variety, an absolutely wonder for all of the other economic principles. I mean, just think about the fact that you can have a higher transactional rate with currency. That alone will cut the majority of business deals down by the time span by probably more than 20 to 30%, which on a wider scope, to give you that big picture, think about how fast businesses can really grow at that point. And once a business grows fast, it'll have a quicker, a bigger, and a more effective impact on the people around it, right, and the targeted audience. Take Apple, for example, right? If the fund transactions happened quicker from all of the manufacturing deals that they had, the time it would take that it would normally take to produce an iPhone would be quick, right? The time it would take to get it to market would be quick. It'd be a lot faster than it is now. So this as a whole has an absolutely profound effect on the market and the economy of the entire world. Whether people want to realize this or not is beside the point. That's just the reality of it. So for the future, crypto is 100%, no doubt about it. It is 100% bullish. Bitcoin will go up. XRP, Ripple, Litecoin. The cryptos that have true value will rise, and the altcoins that don't are obviously going to fall to nothing. But how G20 basically affected it is it said, hey, forget about all this regulation bullshit. We're not interested in any of that. So this obviously took quite a rise. And as you guys can see, Morningstar formed on the daily chart. So I'm expecting a bullish move from here up to at least roughly $1, $1.08, somewhere in this range prior to the next push down. After the next push down, this is essentially, I'm going to give you guys the outlook. Push up to here, push down into this area, back down into the 85-cent level, and then it'll consolidate here for a little bit. Afterwards, it should push higher. We should see a break of the $1.20 range. Once that $1.20 range breaks, the next projected target for Ripple is going to be $2.25, you guys. So it's really going to hop up there. It's going to really be, it's going to take off, right? It's going to take off. And this might happen fast, and it might happen in a slightly longer time frame. But no matter, this is essentially the projected target, right? In the longer term. Beyond that, I am expecting an overall trajectory down the line of $5. And this has been an expectation. And from a technical perspective, I'll kind of give you guys an idea as to why this is going to happen, because obviously this is going to form a teacup formation, as you can see from here. And if you grab that and then take that same distance up, you can see that this will easily breach the $5 mark, which is here. This technically is showing an end point of about $6. Okay, so $5 is my prediction. This is showing 6, and it could easily go much, much higher. Keep in mind, there is a large amount of Ripple in the market space, and more is obviously being released. So in order for enough liquidity to come into the market and really take effect to boost the capital of Ripple to that level, it's going to take some time. It's going to take some production value. It's going to take a lot of growth, essentially, not from just the crypto market as a whole, but also from the technological aspect of Ripple itself, right? What it can do right now, they're already partnered with over 100 banks. They're partnering with a bank a day on average, according to statistics, right? So we're really just looking for an overall bullish move from this. You guys, the CEO, the marketing team, everyone in Ripple is transparent. They see it as a technology, not just a cryptocurrency. And that's what really leads me to believe in this particular investment, right? This particular trade, because that's really why we are all coming into it, right? At the end of the day, it's to me, it's more than obvious. This is going to end up being a technological innovation worldwide. But apart from that, we're trying to make money, right? Let's get real. So what's the option here? Well, the option right now is just a bullish move up. Now, whether this is going to pop down lower or not, there is a possibility. I would say that's about a 30% chance that we could see another lower low get set. It should not go any lower than 35 cents at any under any condition or circumstance ever, period, if it gets down there. And the chances of it going down there are about between 20 and 30%. There's about a 60 to 70% that it's going to rise up to here and then afterwards consolidate. And then there is about a 20% that it's just going to shoot up like crazy. Okay, so it's good that we're seeing these structural formations. It's healthy. Let's pop on to Bitcoin. We're going to do a quick analysis on that, and then I'm going to throw it over to JP and Adion, which are eagerly awaiting to kind of touch on the fundamental aspects of the G20 meetings, not just cryptos, but also a little bit of the currency market as well. So Bitcoin on the daily chart, bullish movement. We see the rejection candle right off the 78.6 fib. We see another confirmation candle here, so we are expecting higher highs with Bitcoin. And if we take an overall extended fib, and we'll grab it from here, we'll drag it to this area, a little bit higher, there we go. Next projected target, roughly 30K, okay? Roughly 30K, and that really is what it's going to be. I don't see this popping into the 60s and 70s, not this year at least. But if this teacup completes and it pops off, 35K, probably about the max for the year. Which nonetheless, right now, considering it's at 85.93, pretty substantial profits. Everyone that hates on Bitcoin and that doubts Bitcoin, that's fine. You can dislike it all you want. The reality of the matter is the technicals are aligning to the positive. The fundamentals are aligning to the positive for cryptos in general. Okay, in the long term, we will see this rise, right? And there's a lot of people out there backing it. A lot of big figureheads saying, oh, 91,000, 92,000. I think that's way overstretched for 2018. I think that's way, I mean, that's just out of this world. If it hits that, I'd be shocked. But 35K is practical, it's logical, it's technical, it makes sense, and it's realistic as well, right? Because if we really see all of the liquidity being supplied back into the market, if the market does hit a $1 trillion market cap this year, 30K to between 30 and 35K is a possibility for Bitcoin. So what I would advise, I don't want to say hodl. That's not what I'm going to say. I'm going to say strategically insert yourself into the market. Don't be an idiot. And when you see this thing go down on a retracement, do not panic sell. Okay, all the people that panic sold are amateur investors, right? We've been doing this collectively a little over 5 years, you guys. I've personally been trading crypto a little over 1 year. Got in at Ripple when it was at 5 cents. I'm still holding on to my Ripple. Okay, so before the whole 30, 40, 50 cent hype monster came in, I understood the value of it. And that's really what's important, to do your research, to understand the value of where these things are going to go long term. This should not, don't treat this as just a single, month, 2 month, 3 month trade. Treat this as a long-term investment, because quite honestly, cryptocurrency has the possibility, a lot of potential and a lot of possibility to replace our current currency, essentially, our current currencies. That's really what it is. Right, and really change the way people transact funds, whether it makes complete sense to do for it to happen now or a little bit down the road after things have been worked out, the kinks. Obviously, it's new. It's going to happen, period. It doesn't make any sense for us to continue to trade paper back and forth. Everything is digital. Everything is lightning fast, and now the economic system is going to catch up. So with that, I want to throw it over to Adion and JP, and they're going to kind of share some thoughts, share some words from the fundamental aspect of, not just cryptos, not just the G20 meetings, but also a little bit on the Forex markets.